Today, I want to talk about the concept of accrual in accounting. You must have heard accrual accounting, accrual basis, accrued expenses, anything accrual or accrued. That's what I want to talk about today. I want to contrast it sharply with the cash basis. Okay. This is primary. Professional accountants know this like the back of their hand. But if you're a beginner, you need to have a rock solid knowledge of what accrual accounting is all about. So accrual accounting, basically your accrual concept refers to a system whereby the revenue that is earned by an entity and the expenses incurred are recognized in the period in which they occur and not when cash is paid. What it means is that if you incur expenses or earn revenue 3 years ago in financial reporting, it is that period, that 3 years ago, that is when you are going to recognize the revenue and the expenses, not minding that the money was paid this year or that you paid the expenses, the accrued expenses this year. It doesn't matter. What matters is when you recognize when you earned the revenue and when you incurred the expense. So you must have heard of accrual basis. That is what the basis simply means. Another very important aspect of the concept of accrual is that of matching concept or matching principle. Now, what this means is that the expenses that made the revenue, you must incur expenses to generate revenue. So those expenses are not treated in a different period. They are matched to the revenue that they contributed in earning. That is what it means. So you must have heard of accrued expenses. Accrued expenses, and you must have also heard of prepaid expenses. When you prepay your rent, for example, in January, you pay your rent to your landlord in January. You pay from the rent for January, February down to December. You have not really enjoyed the benefit, but you've paid. You've paid ahead. Now, that is what we call prepaid expenses. That is actually an asset, especially at the beginning, until when you start consuming it. So it is an asset as at that point. Now, that is the sharp opposite of what we call accrued expenses. On the other hand, for accrued expenses, at the end of December of that year, you didn't pay rent for January, February down to December, and you already enjoyed the service. Now, that is what we call accrued expense. You have accrued the expense of rent. You have not paid for it. So, I want to believe that right now, you are happy that you have a rock solid knowledge of what accrual accounting is. So if you are using the accrual basis, it means you are only recognizing revenue in the period in which they are earned, and you are also recognizing expenses in the period in which they are incurred, not when cash is paid. But if you are using the cash basis, it means you only recognize revenue when cash is actually received, and you also recognize expenses when cash is paid, irrespective of when they are earned. So that's a sharp difference between accrual basis and the cash basis. All right, if you enjoy this, I want you to join me again tomorrow. Let's look at another aspect of accounting. Let's look at something else. If you have not followed me on social media, please do so. Echela Okori is the handle. And of course, please subscribe to our YouTube channel and invite your friends who want to become professional accountants. Accounting is not all about calculations, mathematics, calculations. No, we are not mathematicians. We have to understand concepts, principles, and follow standards so that we are able to generate information to help users of the account to make the best decision from an informed point of view. Thank you very much. Don't forget to join me and share, please. Thank you.